Hundreds of flyers had to rejig or even shelve their summer vacation plans recently as spot airfares skyrocketed in May before settling down in June. At its highest, the one-way fare for a Delhi to Leh flight in May shot above 40,000 rupees, reportedly more than thrice the prices a year ago. The disruption occurred because Nusliwadia-owned Go First suspended operations on May 3rd, leading to a demand-supply mismatch. Flyers did receive relief eventually, with the Civil Aviation Ministry stating on June 13th that average spot airfares on 9 routes flown by Go First had declined by up to 33% compared to the week ending June 11th. However, Go First's revival is still important, as experts warn that spot fares could potentially rise again because the key problem remains. More passengers are chasing fewer airline seats. There is also a long-term concern that Go First's grounding could accelerate the formation of an effective duopoly in the Indian civil aviation sector, with Indigo and Air India ruling the domestic skies. Indigo registered its highest ever domestic market share of 61.4% in May, capitalizing on Go First suspending flights. And taken together, Vistara and Air India's current market share already adds up to almost 20%. Both airlines belong to the Tata Group. Against this backdrop, some hope has emerged. Go First's lenders recently agreed in principle to support the airline's request for over 400 crore rupees in interim funding to restart its operations. The development comes after the airline's insolvency plea was admitted by the National Company Law Tribunal on May 10th. The airline's resolution professional had recently submitted a business plan and a request for funding to the airline's Committee of Creditors or COC. The COC comprises Go First's lenders, which are the Bank of Baroda, Central Bank of India, Deutsche Bank, and IDBI Bank. Going ahead, Go First plans to operate around 150 daily flights with 22 aircraft. While the lenders have given an in-principle nod, the additional funding would require approval from the respective bank boards. This will happen once the Directorate General of Civil Aviation clears the plans. Go First intends to start operations on July 1st. While this is a promising sign, the original problem is yet to be resolved. Go First had said it filed for insolvency because Pratt & Whitney engines that were allegedly faulty had grounded about half of its 54 planes. At present, Go First is challenging Pratt & Whitney's application for a stay on an arbitral award. On March 30th, Go First secured interim relief from the Singapore International Arbitration Centre, which directed P&W to supply the airline with a certain number of spare engines until December 2023. Earlier in May, while opposing Go First's enforcement application in a US court, the engine manufacturer said the airline has no right over engines. Against this backdrop, what do the experts think are the prospects for at least a limited revival at Go First?
See, there is an obligation on the COC and the RP to keep the company afloat. At least during CRP period, they have to keep it a going concern. So the necessary minimum expenditure have to be funded. I think Go Air must be having something around 200 crore per month expenditure to keep it just afloat. So that is so far 425 may not be sufficient for them to start up the operations. So they have multifarious challenges ahead. Even if they operate on a limited scale, the restoration of the confidence of passenger is the biggest challenge now. And secondly, they have to seek that engine issue you pointed out. It's one of the biggest challenge that say the company came into CIP, IBC because of engine issue and the dispute they were having with the manufacturer. So so far so good, but I have a doubt because this much of funding may not be sufficient.
Yes, it may be possible that Go First takes off again in this scenario. But first, we need to understand that this is an interim finance is a short-term measure based on the resolution professional's assessment on the cash requirement from July to November, right? So according to the RP, an infusion of rupees 425 crore would be sufficient for small-scale operations. Now, the lenders in their assessment feel that further funding may allow the airline to get more investors on board. That would be post the restructuring of debt. This also ties into the point about the engine issues, where, if there are more investors on board later, that could also maybe somewhere put more faith in the airline from the lessor's point of view, where, the lessors would again lease their planes to go first, and then basically Pratt and Whitney can then help go first in that way. Right now, whatever in the court that they have challenged go first, where the lessors had actually pulled out their agreements, and Pratt and Whitney said that they are no longer answerable to go first.
Clearly, there is both cautious optimism as well as skepticism about Go First's possible revival in the near future. But what about a broader recovery in the longer run?
For the long-term revival of Go First, it will depend on serious recapitalization along with an extent of restructuring of the debt and liabilities during insolvency. The interim funding gives them a window and time to seek new investors.
A limited revival of operations may be possible in the immediate future after overcoming significant challenges. A broader revival that sees the airline become healthy will require injection of significant capital, winning the confidence of flyers and lessors, and a solution to the engine issue. But success on all these fronts is still uncertain.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.